I try, try and be as creative as possible.
Wow, could you believe that?
All I know is I don't know what the heck is going on, but every time I leave the room, something happens.
Well, how about, and also Boeing?
Yeah. Oh my gosh, that was the first one that I actually logged back into my charts after doing a couple other things, and I looked up and I was like, oh, Boeing should holding up pretty well. And I look, I'm like, wait a minute, what in the world?
The CEO from Delta came out and said there's a glut of wide-body airplanes.
Absolutely amazing and interesting. You know, you were calling out positive deal flow for Boeing basically the entire month of August.
Right. And so, right now, all of a sudden, that's why. Remember, there was so much pressure on it, and we couldn't figure it out. So there were a lot of people thinking that way, I think.
Actually, looking back on the chart, I want to say maybe it wasn't August. I think it was like in this bounce here, but either
Oh,
way, it
right.
was
Yeah, no, it wasn't August. Yeah.
definitely within the last, let's say definitely within the last 2 months. Because I remember every day in the morning, like, oh, they signed another $1 billion deal. They signed another $2 billion
Right.
deal. I'm like, why isn't the stock exploding? What is going on?
Yeah. So people were concerned about that, I'm guessing.
So I guess we'll get started here. Obviously, today is October 14th, 2015. We'll cover very briefly Walmart imploding, dragging the entire market over, along with a few other things. Came into the day all concerned about whether we're getting followed through from the financials, and midday they basically were kind of back alley talk. Nobody even cared about them. There was price action just was vicious this afternoon.
Right. They're saying 45 points of the Dow's drop was Walmart and 41 was Boeing.
Wow.
So two stocks really, really hammered that index.
Which, you know, that's interesting too, Mary, because that's actually one of the reasons that you and I think most professional traders, we watch the Dow, but as far as um, having a feel for how the overall market is doing, I think everybody who has been in the business for a while now watches the spiders, just because two stocks should not be able to affect it that dramatically.
Exactly. And so you're not getting a true reading on it.
Right, exactly. So, trading education blogs Wednesday night. Clearly, we obviously have to point out what's going on at Walmart here in case you did not see it. We also had Netflix earnings after the close today. I guess we could pull up that chart real quick.
Yep, they missed on top and bottom line. A weak subscriber. That's what their subscriber
renewals or new subscribers.
Subscriber growth. So new subscribers in the United States is
that is, yeah. You know, every business has their own KPI, and it's clear that the main metric for judging Netflix is how did that subscriber number move the dial.
Yeah, there just wasn't the growth that they had expected.
Facebook,
maybe it's saturated.
Facebook is the amount of people logged in, and Netflix is the growth.
Right, exactly.
So interesting. You know, look, we actually felt like we were going to have a pretty good chance of having a trend day today.
Yeah.
Boy, did we get some movement, you know, and I think that's something interesting too, especially for anybody who's listening to this that's not in the live trading room with us. First, I highly recommend you get in there. $10 for a 30-day trial. Just start. But let's say you're not. We spend so much time reminding everybody that when it's not obvious to conserve your bullets, your capital, until if and when the market does offer some opportunities. And gosh, you know, I mean, the tradable moves this afternoon. You know, actually, you know, Mary, if you don't mind, I'm going to take this off of post market for now.
Sure.
The amount of moves that if you did not overtrade. But actually, let me put this in perspective. We were talking about Boeing being a long all day, so I want to put that in perspective. I don't, you know, full disclosure. Right. But we also were very, very clear today, and it was actually the first thing I think both of us wrote in our blog post today. We are in day trading mode. You know, there's definitely some opportunity where you can look at some stocks and say, all right, you know, maybe they're in solid uptrends. But even putting that in perspective, we're only talking about, in this case, 2 weeks worth of price action. So day trading mode meant that you and I both, you know, had a confluence on, all right, we're going to be going off of today's reference points, the opening price, change from the close, yesterday's high, yesterday's low, and then timing some entries in that direction until the bigger picture clears up. For the most part, definitely some individual stock-specific ideas that you can claim to have a longer-term perspective on order flow, but gosh, if you were conserving your capital and you were around for the afternoon to take advantage of some of these moves, there was again, compliance wise, there was money to be made if you had the right mindset and the right strategy for this afternoon. Again, there is money to be made. You just something you need to do that we harped on a lot today. You can't just watch your stock watch. In other words, you can't just be looking at this list during the day, and no matter how you have it set up. Again, I'm just for example purposes here. Listen the Dow. You can't just look at this list and say, "Oh, that's up, that's down, that's up, that down." You have to work the keys. You have to click through and look at the charts. Click through and look at the charts. You have to find the money, and the more you work it, the better chance you have of finding something to do that you're just not going to see in the numbers. So we spend a lot of time talking about that. You must, especially in this tape, you must work the keyboard to go and get money because there's so much changing. There's so much indecision. If you go and dig it out, there's stuff to do, but you got to work for it. We are in a blue collar market that you have to really work your tush off for it, more so than I have seen in a long, long time. How about you?
Yeah, I definitely agree with you there. We really definitely need to keep an eye on everything. And the first half hour, we spend rapidly going through hundreds of stocks.
So here's the SPY. I mean, we basically had a nice push up, nice push back, but then an hour later, we're basically right back where we started. So you had to start forming some new opinions there. I guess we'll go over what we were looking at coming into the day. This is the map of the S&P 500 ending yesterday and the point of view that we had going into today. We did have a few stocks that we actually did like on the long side, and Amazon and Google were actually two of them coming into today. Both of them broke through resistance levels. Both of them stayed up there. We had Apple is kind of neutral today. And here's the chart of the SPY yesterday. So kind of a little bit of a surprise at the end of the day, the fact that we closed so weak and then traded lower on JP Morgan. So based on that, the call coming into the day, SPY gave back all of a really solid trading morning. Expected 200 to be support, but not necessarily yesterday. Maybe we were looking for one more day higher and then pull back. We got it right away. And again, this is what we meant by day trading mode. $200 level be the key reference point. Again, intraday. Above or below that was the area that we're looking for. We actually did open lower and start rallying a little bit, but I didn't want to say challenge anything stronger than challenging, but gosh, it's really challenging right now to give a perspective on anything more than day to day. And I actually think we noticed it in Apple, where I think for the last 7 or 8 days, it's just alternating higher close, lower close, higher close, lower close.
Yeah, no, it really is. And I think you have to be in trader mode because not only that, you don't know what news is coming out overnight to swing a market one way or another. We've had so many gaps in the last maybe 6 weeks.
In the ETFs especially, just incredible. Just incredible. You don't see that in the ETFs. The ETFs, the whole point of the ETFs is your risk is spread over professionally managed, well-picked stocks for whatever that ETF is. And well, look, we're trading in an incredible tape. There's opportunity, but you absolutely need to have an edge right now. If you don't have a conviction in a really solid strategy, and you can't look at a stock and say, I have a really good feeling it's going to do this because of this, you are absolutely gambling, and you are going to get your head handed to you right now because this is not a forgiving market, not even in a chance at all. So I guess we'll cover some of the JP Morgan obviously was the story of the morning coming off of earnings after hours yesterday. So we basically closed up here, ended up down here, and followed through pretty cleanly. What we did not do was trade lower the rest of the afternoon, which I think was kind of interesting. Goldman was all over the place, but they haven't reported yet, so I think that's probably a lot of people jockeying for position. Right. Bank of America this morning as well. Actually gapped higher, but did not hold it at all, other than within that first hour or so of the day. And look, the close is starting to get a little bit of strength. I mean, 2 days ago, I felt really good on the price action that we were pushing up, pulled back, consolidated. We're going to hold this level and then have another bounce, which, technically it's still there. I mean, it's still basically a gap. We're holding above. We didn't hold the 200, but we're holding the 50. It's a pretty clean flag. The volume is not exactly explosive on these moves lower, other than, very stock specific or sector specific.
Yeah, exactly.
But look, I haven't written it yet, but I'm going to say the same thing for tomorrow. You have to be in day trading mode. I mean, Here's the S&P 500 closing today. A couple of pockets of opportunity of semiconductors. And again, basic materials, which was the stronger sector all of last week. Took a couple of days break, but resumed it today. Retail just absolutely got slapped silly today.
Yeah.
And it was across the board. It wasn't just Walmart. They dragged everything down. And briefly looking into some of the remarks, essentially, is whether or not they should continue with some of the divisions that they have, and Sam's Club, and losing money on stuff that they don't understand why they have anymore. And interesting. No other way to say it, but interesting.
Right. They almost seem confused.
Yeah, exactly. And you know what? That's what we've been saying about Twitter for a while too, Marion. I mean,
true.
Right.
Yeah.
And you know what? Apple as well. I mean, Apple clearly still has, this is the Titanic. It's going to take a long time before that perception changes at all. But they're getting into different businesses. I mean, they're going from, let's exaggerate a little bit, transistor radios to building a car.
Right.
I mean, obviously an exaggeration, but it's really what they're doing. So you have to think about the companies that became the largest companies in the world and how they got there. Sure, they expanded the portfolio a little bit, but they're starting to get out there, and the competition is not as small as it used to be. I mean, Amazon sells everything that Walmart does. You're just not going to the store and, squeezing the oranges.
Right.
So interestingly, we did have Netflix as a bullish idea coming into the day, but obviously, as we discuss every morning, that you just have to be aware if something has earnings. And, we actually pointed that out to everybody today, both pre-market meeting as well as the live, when we started trading live. Trade Netflix at your own risk tolerance today. Just be very aware it's going to be squirrely, based on indecision heading into the afternoon. And, actually, again, a couple of people in the Facebook group commented about trading Netflix after hours today. I just don't see it. I just don't see holding that into it. No matter how much advice you can give somebody, it's always they got to do what they want to do.
Exactly.
So again, we did have Google and we did have Amazon as longs today, and we'll show you, I guess, briefly on why we felt that way coming into today. Basically, it was this: both of them had pushed above the most recent levels. Amazon clearly looking at 580 as the next target, 2 days, and a nice consolidation day, looking for a push higher. Obviously didn't get it. And Google, same thing. We had somebody who trades this every day in the room, and look, what's the answer? The answer is 695 is the next level, and every reason to believe it. Finally breaking out here after attempting multiple times, you were going to get through there. We had UNH as well. Which we had said, don't put the alert at 125. It's got to be past that level. And, of course, it gets right up to 125 or pretty darn close, exactly 125. When you start to hit a level like this multiple times, you feel good that it's going to get through eventually because of how many times it keeps penetrating it. But you don't want to have the alert, or especially a buy stop, right at the level. You want to have it past that level and let it prove it's going to stay there.
Right, exactly.
So you can see the amount of opportunities on the long side, and let me tell you, there's a lot of different criteria that goes into this, and you can only tweak it so much to the point where you're not calling out stocks that are actually in uptrends. Even with the tweaking, there wasn't that much to call out today on the long side. Twitter, obviously, inside day with a lot of news with recent announcements and whatnot. G-Pro, still a lot of people talking about whether or not G-Pro is bottoming out. I guess we could pull up that chart briefly. Intraday, some pretty decent move to the upside. And what we're really pointing out is the amount of increase in volume on the way down that is technically the textbook definition of accumulation. And again, this is a 50% haircut. 66 down to 33 is a 50% haircut. And we're starting to see accumulation. Now, again, put it in perspective. That doesn't mean it's a long. It means something's going on that you should pay attention to. I had a lot of emails about that. Should I get long now? No. Accumulation and distribution is a process, kind of like we had spotted on the opposite side with distribution in HOLX. If we go out to the weekly chart, you can clearly see here it's a process. It takes time. Distribution is always sloppier. Accumulation is always quieter. And that's what we're seeing here on the way down. So it's going to be interesting to see how that one plays itself out. As far as on the short side, we did have some pretty decent ideas on the short side today. FEYE, AMBA, a couple of pretty good ones that ended up following through. Tesla, a little bit untradeable still. I think it's got to absorb that move down. We were looking at DE as one of the better shorts today as well. COF, a couple of the financials, obviously riding the coattails of JP Morgan. And they actually had some pretty good trend days to the downside and some multiple opportunities to hop on the bandwagon there if you missed the first one. It seems like that first half hour now, Mary, obviously we're not trading in the same room, but it seems like to me this is a market environment where you really need to be feeling the tape out in the first half hour as opposed to trading aggressively. What do you think about that right now?
Yes, I definitely agree with you. And if you get in at all in the first half hour, it's small size, wait, not your entire position.
Yep. I actually think that because there's not a lot of stuff that's truly obvious from a order flow perspective, I almost think that you have to be working positions either way right now, unless you really feel confident that you have a trade that something's going on there.
Right, exactly.
So as far as tomorrow is concerned, again, there's a little bit of a battle here because we're staying above. We pushed higher. We're staying above. We're not exactly having a down day on 200 million shares. I mean, 97 million shares 2 days in a row. That's relatively light volume still.
Yeah, no.
So, you could make the argument that's 4 days of light volume in a row after a momentum move to the upside and we're still above the 50.
Yeah, actually, that is a good argument.
So how does that translate into a call for tomorrow? I think we're in day trading mode again. I don't, unless something crazy happens pre-market tomorrow with earnings or otherwise, I kind of feel like you just have to let the market play itself out in that first half hour because we don't have momentum moves necessarily where you can say it's reaching a point of exhaustion or oversold. We're certainly not breaking out of a trading range right now. So I think you got to just, shift it back to old school and day trade again.
Well, and I think that's actually the safest way to, I think that's the way to preserve your capital and to make more on the days when you can.
I agree. I definitely agree. Very important to have reference points that matter to you intraday. So you can say, right now I want to be long, right now I want to be short, or based on my reference points, they're all over the place. I don't want to do anything, but they have to be definite. You have to say, these are the points. And again, obviously we're very big on looking at the opening price, high and low for the day, and then trading around those numbers. You can use whatever you want, but just to give you an idea of two of the many that we actually discuss in the meeting. So that's the call for the end of the day today. Hope you were conserving capital in the morning if you didn't find anything obvious, and then hopped on some of those retail opportunities in the afternoon. All of them went down pretty much. KSS got clobbered there. Macy's, we actually had Macy's as a sell short coming into the day. Nice consolidation for about a week now. So I would expect follow through in them tomorrow. If it's an exaggerated move to the downside, it probably wouldn't be shorting until the first rally. If it opens flat and starts to push lower, I think then we could start to hop on the bandwagon. But I'm sure everybody all over social media tonight will have an opinion on the size of the move in Walmart today, the size of the move in Netflix, and everybody sharing their opinion and everywhere you can think of tonight. We'll let it digest and come out with a good game plan for tomorrow morning.
Yep, sounds like a great idea.
Okay, Mary, thank you very much. Have a great night.
Okay, you too. Good night, everyone.
Bye-bye.